And that's where we'll cut. Gene, is that good? Right? Jason, did you hang up? Are you gone?
Just hung up.
All right. I'm going to text Jason, and he took the instructions very literally. All right, Steve, we got another great episode today. We got my friend Jason Leavitt on the show. He's local here in Colorado to me, but he and I share a common bond in Chicago. He's from Chicago. I am not from Chicago, but I lived there for 10 years. But so I got a little bit of a bond, a little kinship with Jason.
I feel like half of the people that we've had on our show at this point have some sort of a tie to Chicago.
I know we've had a few Chicago guests, and we got another one coming too pretty soon. We won't give it away, but yeah. Well, it makes sense, right? I mean, outside of New York, Chicago is a big trading community, one of the biggest, right? One of the biggest in the world. That's the home of derivatives, which I trade. You trade some derivatives too.
But it just seems like the traders that we talk to, they tend to get their start on the floor at one of the Chicago exchanges, not New York. I mean, sure, there have been a couple from New York, but far more from Chicago, really. So,
well, we'd have to ask our buddy Jay Woods about this, but I have a hunch that back in the day, back when trading floors were a thing, and I don't want to say that any of this was easy, but I think it was easier for a trader to get on the floor at one of the Chicago exchanges than it would have been to get on, say, the New York Stock Exchange floor.
Well, getting a seat at the NYSE, is a whole thing, right?
Yeah, I mean, again, we have to ask Jay, but I think at NYSE, you kind of had to be involved with a big firm. You had to be in the club, so to speak. Whereas Chicago, I mean, it was really, I don't want to say it was kids off the streets, but in a lot of ways it was. I mean, it was kids from the old neighborhood, kids who not necessarily went to college. Some did, sure. But it was just a different path, I think, onto the floors in Chicago.
Well, it seems to be working, Sean.
All right. Well, let's bring today's guest up, Jason Leavitt. Jason, hey, man, thanks for being on the show.
Hey, Sean. Hey, Steve. Good to be here.
How you doing?
Very good.
I love that while we're recording this, Straza, I mean, this won't air for a few days, but the World Series is going on. Looks like the Yankees are about to get smoked. But Jason Leavitt, even though that the Cubs couldn't even smell the playoffs this year, he's still representing the old Cubbies. I love it. I love it.
Yeah, Go ahead, Steve.
I went to a Cubs game this year.
It's good. It's good. I went to one too here in Colorado. In fact, Sean and I were at the same game. We didn't know we were at the same game, but I noticed later on when you posted pictures, I saw that. Hey, that was the game I was at. That was the game where the dude hit the grand slam at the end of the game.
In the eighth inning. Yeah.
Yeah. I was there.
That was the first time I ever sat in the section that I sat in there in dead center field. And I don't recommend it. I'm going to go on the record and say I don't recommend it. Center field in Wrigley Field is a great spot. Anywhere in the bleachers in Wrigley Field is great. But at Coors Field in Denver, I don't recommend it.
I've been to over 100 games at Wrigley. I've never sat in the bleachers.
Are you kidding me?
Never sat in the bleachers.
Spencer was sitting in the outfield at the World Series last night. He almost got hit by a home run.
That's true.
I swear. Yeah.
Jason, I can't believe you've been to over 100 games at Wrigley Field and never sat in the bleachers. That seems like unacceptable.
I was a season ticket holder before I moved to Colorado, and we always had decent seats. And I don't know. I want to watch the game. I know people call Wrigley like the world's biggest beer garden, or they call it like a bar with a $35 cover charge, whatever it costs to get into a game.
$35. That was 40 years ago.
Back then, yeah. But I actually go to watch the games. I actually want to see the games. I'm not out there. I'm not out there to just drink beer and socialize. I want to watch the games.
This is what I like about you, Jason. You are a real baseball fan. When you and I talk baseball, it gets serious. We haven't had much to talk about with the Cubs over the last few years, which is a bummer. But you and I were both here in Colorado when the Cubs won in 2016, and that was fun.
It was awesome.
All right. Let's not talk baseball. We could talk baseball. But, what we like to do here on this show, Jason, is we're not going to get into the nuts and bolts of your trading strategies, and we don't care what you think about what the S&P is going to do this week. It's not about that. What we like to talk about here is we like to get into, the mindset and the life outside of trading and how you stay focused and how you stay energized and how you bounce back from losing and how you celebrate winning, like all that stuff. This is stuff that is as meaningful, if not more meaningful, to traders. So let's just hit you with a hard question right off the bat, Jason.
Yeah.
And that is, why is trading so hard?
I actually don't think trading is that hard.
Ooh, hot take. All right, let's go.
Yeah. So I could be. I'm gonna disagree because it'll make it more interesting for us to talk back and forth. But I actually don't think trading is that hard. I think you can make it hard, but I don't think it's that hard. So to me, my take on it is there's like two things that you need to be in place in order to trade really well. And when somebody says trading is hard, it means one of those two things is off, or if they have both things on, then trading's not that hard. It's actually relatively easy. If something's off, then it's hard, and if both things are off, then you might as well go to Vegas.
Yeah. Could that be the hard part, though, figuring out what you're explaining? Because a new trader is programmed to think that trading is hard and that this is all very complicated and markets are so complex.
It's possible. And we can talk about that. So to me, number one thing that needs to be placed is you need to have a relatively simple system that fits your personality, that works, that you've back tested, that you believe in, that is scalable and repeatable, and that you could just comfortably execute within your comfort zone. Okay, so when somebody says trading is hard, if I turn around and ask them, well, what's your system? Most of them will struggle to tell me. And then it's like, well, no wonder why trading is so hard, because you don't actually have some sort of a repeatable system that has structure. Now, there could be some discretion within the system, but there needs to be some structure, and there needs to be some boundaries that you're operating in. And if you don't have that, then it's hard. And then the second thing that needs to be in place is you have to realize that your system is going to work extremely well under some conditions. It's going to work pretty well, moderately well, kind of okay in other conditions, and it absolutely is not going to work under under some of the time. And so you might be a breakout trader, but the market is either following through or not following through. You might be a mean reversion trader, and the market is moving directionally, whatever the case. So both of those things have to be in place. One, you need a simple system that works, that you can execute, and then you need to know my system works really well under some conditions and it doesn't work in other conditions. And if you can match that up, trading isn't that hard. But if you don't have a system, then trading is hard. Or if you try to take your system and force it on a market that is acting differently than what your system gives you, then it will be hard. So anytime somebody says trading is hard, I don't get it, I'm in a losing streak, most likely they don't have a system, or they're forcing their system on a market that has changed. Like 2 months ago, it was working great, but today it doesn't work great. And in those situations, you need to step aside, let other systems have their day in the sun, and the market will change again, and then you'll be able to go back to an easy dollar market again.
There's a lot to unpack here. I would go straight to the systems not working in every environment, Sean.
Yeah, I mean, I think that's a key point right there. So trading is not hard, but the skill of learning when to step on the gas because your system is ideal for this type of market, and when to pull back because it's not, that's hard, right? I mean, I have a hard time with that, Jason.
Yeah, I would agree. I think it's hard. It's easy to know what you should do. It's hard to actually do it. To me, my best indicator is the results of my own trading. If I have 3 or 4, I trade a certain way, and if I have 3 or 4 losses, I need follow through. I want to trade within a trend. I want to play a breakout. I want to buy a dip within a trend. I need some follow through. But if I have a couple losses, the market is giving me feedback. Now, I could listen to the feedback or I could ignore the feedback. And if I listen to the feedback, then I'm going to tone things down. If I ignore the feedback and I keep pushing forward, then yeah, trading's hard. So I think it's if you could objectively get feedback and listen, it's not so bad. If you kind of ignore the feedback, if you're stubborn, then you could make trading as hard as you want.
So most traders are probably trading a single system, and they're listening to your comments and saying, well, then what the hell am I supposed to do when it's an environment where it's not working? Do you just do nothing? Are they supposed to walk away? That's hard.
Absolutely, that's hard. I think the best thing is to have. I have a trading friend who he has this like thing. He says 4,000 more days. It's just his way of saying, I'm not trying to make money today or this week. I'm in it for the long haul. And it's okay to step aside for a little bit and wait, because if you plan on doing this for several years, I mean, think back to like 10 years ago. If you would have skipped, January 18th to February 14th, way back in 2015, you wouldn't even notice that time period was missing from your trading. So in the here and now, it's hard. But if you're thinking, I'm going to be doing this for many years, stepping aside for a period of time here and there shouldn't be that hard.
Steve, Jason said something interesting there that kind of got my brain thinking. He said the best data we have is our own trading performance.
For sure.
Do we need to start applying technical analysis to our equity curves?
I think it's like Jason said, when you just have winner after winner after winner, put on more of those kinds of trades. And if you're losing, come off the gas a bit, let the, dust kind of clear. But yeah, no, I love that.
Sean, that's interesting. I've actually thought about that. Looking at my P&L, sometimes it'll go up to a level and then it'll back off, and then it'll go back up to a level and it'll back off, it'll go up to a level. And I'll say, and when it comes back down, I'll say the next time it gets up to there, I'm going to cash, and then I want to start from there rather than starting back down at a hole. So I've actually sometimes looked at my P&L as a little bit of a chart. It does not work as well as like a normal stock chart, but I've actually thought in those terms that like I'm sick of pulling back off my high. Next time I get there,
One thing I've been good at, Jason, is when I see my equity curve break out to a new high, I'm good at like, okay, let's put a little more on. Let's get a little riskier. Things are working. But what I'm bad at is dialing it back when the equity curve is going the wrong way. That's where I could use some improvement in my own trading.
Yeah, I mean, you can look at a list of like, why do traders not succeed? And I think, well, you can work backwards and say like, why do good traders become great or great traders become elite? It's the same cliches you've heard. It's because they backstop their losses. They don't have big losses. They don't dig themselves a hole when the market goes against them. And then on the other side, they push the accelerator and they push it a little bit when the market goes in their favor. So the opposite of that is traders who don't make it, they lose too much on drawdowns. And then when the market goes in their favor, they're making money, but they're not making enough. They're not really pushing hard enough. If you want to, for most traders to go from good to great or great to elite, they need to push on the gas and really take some bigger positions and really take advantage of opportunities. And they do the exact opposite.
Yeah, and in fact, when you look at like your own trading and you look at when your equity is in a little bit of a dip, hindsight, of course, being 2020, right when you're coming off that dip, that's the time to go big because you're going to make it all back. And then once you're up and making highs, maybe you should be trading a little bit smaller to cushion that next pullback. But of course, nobody can do that. Nobody can do that reliably. I mean, it's like picking tops and bottoms in the stock market. We can't do it. We can all attempt to do it. No one can do it every time. But man, yeah, I beat myself up for it. I mean, I do this all the time, Jason. I beat myself up for it when I have hindsight. When I look back, I'm like, oh, of course I should have taken my foot off the gas over 3 weeks ago when these positions stopped working. It's so easy to beat yourself up about that. So, Jason, when you hit like a rough patch, when things are just not working and you're hitting whatever, your trade's not working, it's gone on for a while. Do you find yourself beating yourself up? And if so, how do you come back? How do you get out of that rut?
So like psychologically or mentally, the first thing I do is like, and this is really cheesy. It's like when you get into a rut, is like take inventory of life. It's like I got a roof over my head, got some money in the bank. My kids are all doing well in school. It's like the reality is like I don't have anything to complain about. So when you go through a little bit of a rut in the market, I've been trading for a long enough time that like, hey, if I have a soft patch in the market, that is such a minor thing in the big picture. Okay, I think I could stomach like a couple weeks or a month of losses. It's not the end of the world. As far as like the actual trading goes, it just comes down to like my results. Like, why am I in a drawdown? Like, is there something wrong with my system? Is there something, am I not matched up with the market? Like I said, I need follow through. I need I need stocks to keep going. I need stocks to move directionally. I need stocks to be like alive, not just kind of dead in a range. So am I being too aggressive? Am I trading the wrong stocks? Just try like objectively try and figure out like what's going on here. And typically when I analyze things, there's just something that's just off. Occasionally it's bad luck. Occasionally, like, hey, I'm doing everything right, but the stocks I played just happen to not be the ones that worked. But most of the time, I'm pushing when the market has changed a little bit, and I needed to make some adjustments that I didn't make, and like it sucks. Great, I've lost money the last couple of weeks, but I've identified what's going on, and I could get back on track.
You keep talking about the concept of follow through and the importance of follow through for your system. It makes me think of some systems that we have. Are you trading pattern breakouts?
My preference, like the ideal trade for me, is a stock ramps up on strong volume. Say it goes from like 10 to 13, volume's really strong. There's obviously something going on there. It's not just a technical move. It's like there's something going on there. There's a lot of buying. Then the stock flags sideways for a week or two under, with lighter volume, lower volatility, just rests, pauses in a pattern. And then I'm looking to play a continuation of that. So I'm going to probably buy a breakout within that pattern. And then I'm going to add to it when it breaks out. That would be my ideal trade. Now, if that follows through, that's what I want. If it breaks out and goes for 2 or 3 days, but then comes back down, that's the market is giving me feedback. The market is telling me either that stock is not ready to go, or the entire market is telling me like the environment is changing.
Yeah. So this kind of system is going to do a lot better or not good at all based on the environment more than anything.
Absolutely. Right? Absolutely. I think, this is an error that traders make, is they think that they are, unlike we like to liken trading to like sports, where like you have to actually be the one that succeeds. You're the one that shoots the ball or hits the ball or whatever. And in trading, a lot, and because of that, traders like to when traders make money, they like to pound their chest and like, I nailed that, I made money, I nailed that move. And then when they lose money, they tend to like, oh, the analyst this, or they're just trying to run stops, or like the Fed that, or like news this. And actually, for me, the way I trade, most of the time it's the opposite. When I lose money, normally it's because of me. But when I make money, normally it's because there's like some sort of underlying theme that's playing out, and I'm just like riding that. So it's like I'm not actually the one doing the work. I'm just taking a position and letting the market do the work for me.
That is such a refreshingly honest take there, Straza. He clearly said that when he's losing, it's all me. I suck.
Yep.
And when he's winning, I'm lucky. I'm the right guy in the right place in the right theme. I love it.
You get this a lot. Sean, we were just watching the Jim Rogers interview at the studio last week, and I always think back to, hey, tell us about your best trade. He can't even think about his best trade. Like good traders, they think it's on them. They take responsibility for their losses. They remember their losses. And then the winners, they don't overthink. They just, like Jason just said, oh, that was the market. It wasn't me. Right? Yeah,
Jason, I imagine you would agree. It's something that we say at All Star Charts a lot, that we're not lucky. We create our own luck. We're in the business of creating our own luck. Would you agree with that?
Sure, absolutely. Absolutely. To me, there's two types of trades. There's like the tactical trade where like I have an exact system. Okay, this is how I enter. This is my stop. This is my target. Moves in my favor. I'm going to move my stop up. I'm going to take profits. I might add to it on a little dip. It's like I'm actually doing the work. That's like a tactical trade. And then like the second type of trade is like, doing one of these, like which way is the wind blowing, and let me just position myself to benefit from that. And so like to know before I enter, I got to know which type of trade I'm taking. Is this a tactical trade where I'm going to actually be actively involved in it? Or am I just taking a position and trying to sit on my hands the best I can and letting some sort of underlying theme or story play out? And to distinguish between those two, to me, is really important. So like the tactical trades, I'll take some credit for it because I'm actually doing stuff. And I have more tactical trades than the other type. But over time, I make more money in the theme-based trades because I'm going to sit on my hands and nail 50 or 100% moves. And it's not always easy because there's going to be, a few bad days in there. But over time, that's where the bigger money comes from, is when there's some sort of underlying theme, and I'm just going to let the market do the work for me, and I'm going to try my best to get out of the way.
And so, so in terms of maintenance, there's a lot less to do with the theme-based trades instead of the tactical trades.
For sure. Absolutely, for sure.
Would you say,
Jason,
yeah.
Oh, sorry. Go ahead, Straza.
I was just going to ask if there's anything that you might think from a character trait perspective that lends itself to this system. Like, is there something about you personally that helps you trade this system? You ever think about that?
There's probably something there. I've had, I can go back to the beginning, and I've had a few conditions that kind of molded me. And I often think, like, Sean has a much different background than me, not in life, but in trading, where he was trading in a firm, and like there was a lot of guys there and a lot of testosterone and like really, really active trading. And like Sean told me just the other week that he paid more in commissions than, if he could get refunded all his commissions he paid back then, he'd be retired, 10 times over.
I could definitely retire on the commissions I've paid.
So if I went back to, I don't know, like maybe if I would have traded in a prop shop like Sean did, maybe I would have been molded differently. I don't know. I think I could have gone either way. But for me, I can go through a couple things that kind of molded me. Like, one, early on, I didn't have much money, so I actually made most of my money early on trading options. And Sean could tell you that I started in late 99, early 2000. So back then, options were different. Like, there were only quarterly options. Okay, there weren't like monthly, there weren't weekly and stuff. It was quarterly. It was only on the bigger companies. Not every stock had options. The spreads were pretty big. So I had to trade, and because they were quarterly, I had to look out further. There was no short-term anything. So what I found out is that, like, I had no idea what the market was going to do day to day, and I didn't really know what it was going to do like months into the future, but I had a pretty good sense of what it was going to do like 4 weeks into the future, because 4 weeks was a long enough period of time that there could be some short-term noise, but it was still short enough that whatever trend was in place could continue to be in place. So it was like a happy time period. So I made most of my money early on trading like options, looking out like 1 month. And that kind of molded me a little bit. In my early days, I was also a restaurant employee. Okay. And the nature of being a restaurant employee is that, like, sometimes you work lunch, sometimes dinner, sometimes you work both, sometimes you work neither. So I had 2 sets of data that I could use. One of them was like I'd worked a lunch shift. And one of them was like I was in front of my screen all day long. And the second set of data was I can be in front of my screen for like the first hour of the day, and then I had to go to the restaurant. Wow. So I could see, like, I had 2 different sets of data. Like, when did I trade better? Was it when I was in front of my computer all day long, or was it the one where I was in the market for the first hour, had to set stops in place, and then be gone? This is pre-iPhone. You couldn't check prices. All I could do is come back at like 5 or 6 or sometimes midnight and see what happened. And I could compare those 2 different sets of conditions. And I realized over time that I actually made more money being at the restaurant than sitting in front of my computer staring at my screen. So I realized, like, I was my own worst enemy. That when I was in front of my screen, I would micromanage. I'd get really nervous. I wouldn't plan as well. I tended to take trades that were like higher risk. But when I was working a lunch shift, I had to plan more. Like, I had to put a stop in place. I had to just like trust. I had to trade the bigger picture because I couldn't micromanage anything. Sometimes I get back home at like midnight. I look at the chart. I see that the stock was like up like $1, and I look at the intraday chart and say, "Wow, it's a good thing I wasn't here, because I probably would have gotten out right there." But because I didn't, I was still in. So that was another thing. So I traded options, which forced me to trade bigger companies that were more, well established. Looking out a month, I was in the restaurant industry, where again, I traded. I realized I traded better when I was away from the market, and so this all kind of molded me to kind of how I trade today. So, like, I don't know, maybe if I worked where Sean was working, maybe I would be short term, but these are the conditions that existed when I started. They molded me, and that's kind of I've kept with it. Like, even nowadays, I'll sit on my hands, or I'm going to go in my backyard and pick some weeds. I don't want to sit here and stare at my screen, because I'm more likely to do something stupid or something I'll regret than if I were to just like walk away and let the chart fully play out.
Jason, it sounds like you and me need to start a Chicago Italian beef sandwich shop here in Denver so that we could do that and keep us away from our screens and make more money.
I'm in.
Do you think that you molded your time frame to the quarterly call options? Or do you think that was just some sort of beautiful coincidence that the quarterly call options just happened to be perfect for the time frame, the trend that you were kind of trying to trade?
I think it was probably a little bit of both, because I would look at a stock and I'd say, and I really wanted to hold for a month. I wanted to, I didn't want it to be too long because I didn't know what would happen. The longer I wait, the longer it was, the more likely something could disrupt it. But too short was too short. So I did look at that 4 weeks. Sometimes I would take, and sometimes I'll look at an option in the expiration date wasn't going to be for another 2.5 months, and that was too long. So therefore the option was too expensive. So I passed on it. Or the option or the expiration date was like 2 weeks away, and it's like that's not enough time. Right. So I had to have a big enough basket of stocks that I had to find ones that looked good, but then also had an appropriate expiration date, which gave me a good enough price, because I didn't want to pay too much in time value. Because if you paid too much, then you needed a bigger directional move in order.
Were you just buying straight calls and puts if you were bullish or bearish, or were you doing spreads?
I was just buying straight calls and puts, because at the time I just didn't have enough money. I could buy 10 calls, but I couldn't afford to buy 1,000 shares of the stock. So I was trading exactly as if I was trading the stock. I just wanted a directional move. So yeah, I was just straight calls or puts.
So that reminds me, one of the guys, Steve, I don't know if you know this, but Jason and I hang out at the trader meetup here in Colorado. Jason has been coming to these things for years. There's another guy at our meetup, and he brought up something to me a while ago about how he's a swing trader with stocks, and he's adopted. He still considers himself a swing trader of stocks, but he's using in the money options to express his bet. And this is what he told me, and I thought this was really interesting. He said, let's just come up with a stock that's $100, right? He could buy that stock for $100. And let's say it's a swing trade. He's going to be in it for 2, 3, 4 days, that kind of thing. He could buy a stock. He could buy shares of the stock at $100 and pay whatever that costs. Or he could say, well, if I buy this thing at 100 and I buy the stock, my stop's going to be at 95. Like that's based on a setup, right? So what he's doing is he'll buy the 95 calls, the in the money calls that have 7 to 14 or 21 days expiration. He's not paying a whole lot of premium because they're in the money, right? He's basically buying call options that have close to 100 delta. And his thought process is, if the stock goes up like he thinks it's going to go up, the option's going to make just as much money as the long stock trade would have made. But the winner for him is, if the stock comes down to 95, which is where his stop was going to be, well, guess what? He would have lost $5 per share if he bought the stock, but the call option is now at the money, and there's now premium at that price. So he's actually losing a lot less. He's maybe losing $250, maybe $3 versus $5 if he bought the stock. And I was like,
that's great.
Yeah,
damn, that's a pretty good idea. Well, maybe I should do more of that for some directional stock trades.
I actually had that thought back when I started. I would get in, the stock would move in my favor and move against me. If I was in the stock, I would get out, because the stock, I have not unlimited loss potential, but my loss could grow and grow and grow. But I was in the option, if all I did is buy the call, my worst case scenario is locked in place. So because of that, and because I had another 3 weeks till expiration, I could just stand back and say, you know what, I'm just going to give it some room here. And a lot of times it would eventually go in my favor. So what Sean just described, where like you could lose $5 in the stock, but maybe only lose 2 or 3 with the option. I did that. I also used it as hey, since my max loss is locked in place here, I could give this another couple weeks to play out. I don't have to get out right now just because we had a couple bad days.
Yeah.
Well, Jason, there's a good chance that the guy I was talking about might listen to this podcast. So shout out PK. PK, that's the guy. He knows who. Jason, you know who PK is.
Of course I know PK.
I got that from PK.
I did something similar to what you're describing, Jason, earlier in my career, where I was trading mostly options due to capital constraints, but I was like trading them like a crazy person, going way out of the money, trading like the junkiest, highest beta names I could find, and just trying to hit home runs. was basically running a system that could be profitable with like a 10% win rate.
Yeah.
And I learned a ton about options and how options can work doing that, and a lot of like what not to do, and a lot of tough lessons about theta decay and all those sorts of things. But it came down to the fact that I just didn't have enough money to buy these stocks. I had to buy the cheapest call options I could find.
And Strazi, you're hitting on an important point there. You said, and you were kind of joking, but you're serious. Like you had a strategy that had maybe a 10% win rate and you couldn't make money. And yes, you can make money in strategies like that because you're going to have the occasional monster win that more than makes up for all the smaller losses. But then this gets back to the theme that Strazi, you and I have been talking about in a lot of these podcasts is trading is easy, quote unquote, but being a trader is hard. And losing 90% of the time you trade is fucking hard, no matter who you are or what strategy you're doing, right?
I mean, that would beat you up. Even in times when it was profitable, it didn't feel right back then, right? I didn't know enough. To lose 80% of the time, I just thought something had to be wrong. Even when I was up, I thought it had to be a mistake.
Yeah, that's the funny thing about strategies where, the math checks out, but it doesn't necessarily mean it's easy for you to do it, right? It's not easy for you to sit there and withstand those gyrations.
Well, some strategies are just, I think, far easier from a mental or from a psyche perspective, right?
For sure.
Options would be among the harder ones.
I think it depends on the person. I think it depends on like what's hard to one person might be tolerable to somebody else and vice versa. I think it depends on the person. The nice thing about options is what you describe is number one is like your worst case scenario is locked in place. You'll never have a catastrophic loss, but you have to deal with 80% loss rate, which is kind of hard to miss that many shots and keep your head on straight. So it depends on the person.
And some people they like that. It's like it's stimulating to have those monster winners. Right, to like be an out of the money call options in a biotech that gets drug approval like that. Some people like thrive on that kind of feeling too. They're traders like that. So
this reminds me of something. When I first started trading in the prop desk, way back when. I remember when I was struggling, I was still, wasn't making money yet. I was still learning the ins and outs of trading. And one of the, I hesitate to call him an experienced trader because none of us were experienced. This guy was just started to make money before I did. and he said something to me that has stuck with me because I was complaining about how like, man, every trade I put on, man, I keep losing money. Like everything I try loses money. And the guy said to me, he said, Sean, well, why don't you do this? For the next couple of days, why don't you just trade 100 shares at a time? I was trading 1,000 share clips at that point. He's like, why don't you just trade 100 shares at a time? And I want you to try to lose money on every trade. I want you to lose money on every trade. I'll bet you can't do it. He's like, I bet you can't. And he was right. I tried to lose money and I kept making like a little bit every day. I'm like, what? It was an interesting thought exercise. I'll tell you that.
When you boil trading down, like a stock could either go up, down, or sideways. Yep. And like up or down is either good or bad, and then sideways is probably tolerable. You could say that 2 out of those 3 are either good or just neutral. And if you just think about it just like that, it's like up, down, sideways, that's it. And then you think about like the world of high finance and PhDs and like all the complex ways that you can analyze a stock or analyze a company. And then you boil it down to like the only thing that can happen is it goes up, down, or sideways. Maybe we're making it harder than it actually could be. Now, like with that attitude, like maybe like those of us who only trade our own account, like we're not trading billion-dollar accounts. Maybe when you trade a big account, like you need different analysis technique because it could take you a week or 2 to leg into a position that you really like, and you have to be willing to hold it for a long time because it takes you so long to get in and out. But for independent traders like us, who we could be in and out entirely within a relatively short period of time, we don't need an analysis technique that is more complex than the market could either go, or a stock could either go up, down, or sideways. Maybe we don't need to make this thing too complex.
I like your emphasis on simplicity. What was your learning journey like to get here? Like, were you doing way too much early on? Did you have like 8 indicators on your charts? Like, how did you get to this mindset of simplicity now? Was that kind of a tough journey?
Yeah, I actually talked about this with Sean years ago with a podcast he did. I have one of my favorite trading quotes. It was a guy, Oliver Wendell Holmes, it wasn't a trading quote, but it was a quote that he made in life where he said he was commenting to like some actor saying, I envy. He talked to something about the simplicity on the other side of complexity. And I took it as like a trading quote when I heard it, where like when you start out, everything is simple. Okay, you don't know anything. It's just a simple chart. It moves up and down. There's nothing to it. It's like that's it. As you learn, you add. Okay, you add time frames, you add indicators, you add different parameters on the indicators. You add, and at some point in time, you realize that like you're confused. The indicators are they're opposite of each other. They're not on the same page, and you start pulling things off, and then you get to the other side of that, and you realize I just have a simple chart, and I have my two favorite indicators, and that's all I do. And like what that is the simplicity on the other side of complexity. You started out simple, you made things really complex over the course of 6 months, a year, 2 years. It's all part of the process. You spent many nights going bar by bar by bar on many time frames up till 2 a.m, studying, rehearsing, practicing, going bar by bar. But then you start peeling things off and you get to a simple chart with a couple indicators. And that is the simplicity that you end up sticking with. And when you get to that point, you reject it at first because you want it to be hard. You're like, wait, I spent too much time doing this. I actually want it to be hard. I want the barriers to entry to be hard so nobody else could do this, so that I could do this without the competition.
That's a problem.
And you kind of reject the fact that it's simple, but you have to embrace that like it actually can be that simple. You don't have to make it complex.
I love this. I spent too much time on Wall Street in the corporate setting early in my career, auditing all these broker dealers, hedge funds, large financial institutions. And I believe there is a concerted effort within this industry to fool the investing public into believing that this is all way too hard for them to do by themselves.
I 100% agree.
The greatest trick Wall Street ever pulled on the world was to trick us all into thinking that we can't do it ourselves. It's as simple as that. And
I agree. Go ahead.
Generation from generation, it's always been that way. And I think that's one of the things that we all do best here is just coming out, talking to people, putting out content, and kind of making this relatable or making this look easier. You coming on here and saying, it's not that hard. We just make it that hard. Yeah, I love that.
Yeah, I agree. Like 20 years ago, I read it was like a 50-page pamphlet from the Motley Fool where they said like Wall Street's goal is to make it as complex as possible so that you think you need them, so that you'll take your money, turn it over to them, pay them their 1%, and like that's their goal. Like they want to make it as hard and as confusing and complex as possible so that you do that. Some people probably should do that. Most people who don't want to be active traders like us probably are best off, or at a minimum, they could just index their money to the S&P 500 and just put it on autopilot for their entire life. But a lot of the complexity comes from, hey, there's TV stations out there that are running all day long. There are thousands of websites, and it's easy to be lured in and believe that this is complex, this is hard. You're competing against all these people. And actually, no, a stock can either go up, down, or sideways, and you could have a simple chart with 1 or 2 indicators that gives you some sort of like frame of reference and perspective, and you could probably do pretty well. Now, you might not be able to run $1 billion hedge fund, but you could certainly trade your own account, make a couple $100,000 a year, and have a pretty darn good life.
Now, Jason, do we traders, maybe I'm speaking to the new people, new in the business, do we need to go through that arc of starting simple, getting complicated, learning all the complicated shit, and then coming back and making simple? Do we need to do that? I kind of feel like maybe we do need to do that.
I think we do. I actually do think we need to go through the process. I'm going to probably go through it again in the next handful of years. My son just turned 16. He has expressed an interest in trading.
Oh, nice.
And I've thought, like, what do I do? Because I know that I learned because I pulled up charts, looked at multiple time frames, lots of indicators. I'm up till 2 a.m. for months and months and months at a time. And then I got spit out the other side with a simple system and a simple way to operate. And I don't know if I want to just say, do this, because he will have missed all those the year that I went through where I was making money, losing money, making money, losing money, and struggling. Like, I think that's part of the process. I think you need to go through that. I don't know if somebody could just hand it to you on a silver platter and say, just do this. And so
I don't think I would have cut all of these things out of my analysis over the years if I didn't understand them. Like, I don't miss a MACD on my chart. I know what it is. I know the math behind it. We study it. We take a test about it for the CMT. Like, I don't miss it. I also, when it comes to fundamentals, because I understand that and I can talk to somebody about fundamentals. I used to be a CPA. I'm not missing the EBITDA growth story. Like, I understand that that's probably there, and I trust the fundamental analysts when they're telling me, but I can cut that out and eliminate that as noise because I'm coming from a place of understanding. I think that's important.
Yeah. I think it helps to have that not to have the background, to have been gone through the grind. It's like if you were a computer science major and you're a programmer for whatever tech company, like, you needed to have a couple years of writing code till 3 a.m, just grinding it out, trying to figure things out. Now, nowadays you could probably drag and drop some widget in and, like, boom, you could accomplish the same the mission, but it helped that in the past you had actually spent the hours and hours and hours to figure out how to code that into a program, even though nowadays you don't have to because you can copy and paste it. But it's helpful that you did it, that you actually went through the process of doing it. And I think the same thing exists with trading. It's part of the process. Maybe that's why some people don't make it. I don't know, but like I said, I'm going to find out in the next few years because he's going to want me to teach him, and I'm going to want him to go through hundreds of charts like I did and kind of develop a feel and figure things out on his own. And certainly he's going to have an advantage because I'm there, but I don't want to just tell him the answer because my answer might be different than his answer anyways. And I think he needs to go through the process of figuring things out.
You should fuck with him, like set him up with a stock charts format with 12 indicators, give him everything. Go chart away.
Maybe you could try that experiment that I had to go through. Tell him to try to lose money. See how that goes.
I don't understand that. Why would if somebody said that to me? What did you say to that person?
I thought he was crazy, and I thought, oh, this will be easy, and it turned out it wasn't. It just proved that it was a head case thing, right? Like it was proving to me that what I'm trying to do, I can't do. It's not because the market's hard. No. I'm just getting the opposite result of what I'm trying to do. So there's something in my brain that needs to be fixed. So that was the lesson I learned.
Are we done with talking about indicators, or let's bring this full circle? Do you use any now? Your standard chart. You're going to go look at a chart right now. What is it? Just price? Is there anything else?
No, it's price. I have 3 indicators. RSI. I'll tell you the whole thing. It's RSI 12, MACD, standard default settings, and then stochastic 5-3 settings. And I use them. They work. I look for different things for each one. I really like drawing trend lines on the RSI chart. Okay, I find that they're very accurate. When they break trend lines, moves tend to happen. The MACD to me is the trend. Okay, so I look for divergences with the MACD. I look for divergences with the MACD histogram. And then the stochastic is a timing indicator within the trend. So if the MACD is like trending, then the stochastic will go up and down. And like each one of those waves is like a timing mechanism within the MACD's trend. So that's all I do is like price chart and then those 3 indicators. And by now I've looked at it enough that it all just kind of like, like an airline pilot looking at his dashboard, he knows what's there. It's like, I know it's there. It's all familiar to me.
And you're almost viewing the 3 momentum indicators like in a single lens. Like you're looking at them all together?
They're all on every chart I look at. Yeah. But there are times when I'm keying in on one of them.
Got it.
Okay. So like if the MACD is telling me the trend, and as it's trending, then I'm using the stochastic as a timing mechanism within the trend. Okay. So if a stock moves up, consolidates, and moves up again, during that period, the MACD is just going to be slanting up the entire time. But when the stock moves up, consolidates, and moves up, the stochastic will move up, cycle down to a low, and then move up again. So when it cycles down to a low and reasserts, that's my timing mechanism to get back in. Because if a stock moves up, moves sideways, and goes again, it could move sideways for 7, 8, 9 days. there are some positive candles in there, and you're wondering, should I buy this one? Should I buy this one? Should I buy this one? The stochastic gives me the timing mechanism
That's
to
interesting.
get in.
And how did you fall on 12 days for the RSI? Traditionally 14.
Right. Everything I use, I stole from someone.
Yeah.
Okay. I'm not gonna take credit for anything. I've been running Leavitt Brothers for like more than 20 years. I have a whole bunch of traders there who've been there for 10, 15, 20 years. There's a lot of guys there who are better than me, probably make more money than me. And they post charts, they post indicators, they post all their stuff, and I've borrowed from them.
It's awesome.
And I'm like, if it works for him, I'm just going to use that, and then I'll put it on my charts and I'll use it. And I'm like, this works. I'm just going to stick with it. So I'd love to tell you that I looked at like the 10, 12, 14 in any other setting and looked at it on multiple time frames on hundreds of charts, and I fell on that one, but I didn't. I found a good trader, and that's what he used, so I stole it from him.
Well, art is theft. Yeah, I'm sure you guys have all heard that before. So that's a perfect example. All right, Jason, let's bring it home. When you're not trading or coming to trader meetups or watching the Cubs lose, what are you doing for fun?
All right, so nowadays it's just like chase my kids around. Okay, I got 3 kids. They just 16, 16, and 12. They're busy. And so I'm driving them to sports. I'm watching sports. I'm very involved with them. That's going to lighten up a little bit because the 2 16-year-olds are about to get their license. They'll be able to drive themselves places. So I'm going to have some free time coming up. Go to the gym. I've gone to the gym like all the time for, since I was like a teenager. So being healthy, staying fit has always been top of my list. As far as hobbies go, I'd say, aside from the physical stuff, like go for a hike, love to go skiing here in Colorado. It's like my number one, my favorite hobby outside of that is cooking. I cook a lot. My specialty is probably Italian food. Anything with dough is like I've become moderately good at, whether it's being.
You see Steve's ears perk up. He's like, "What? Italian cooking?"
Yeah, whether it's like whether it's fresh bread or homemade pasta, which then turns into like pasta with bolognese or lasagna, or I love raviolis because once you get good at making the raviolis, there's a lot of different fillings, empanadas. So to me, like a night off by myself, I'm probably in the kitchen just playing around with a recipe and just putzing around in the kitchen, just trying to make some food.
You ever do like ravioli night with the family? Where you get a bunch of different stuff to put inside, and you wrap your own little raviolis with the machine?
Yeah, we do everything by hand. We have a machine to like roll out the dough, but then we will do everything by hand. We make pizza. I got a pizza oven out back. So that's like pizza night is like our big night where we'll make pizza. But that's me. It's like trading. It's like the kids are really busy. They're all doing great in life, and then otherwise like stay happy and just have fun in the kitchen is pretty much what I do.
I think that's great because food also makes me happy.
So, all right, your 2 twins are 16. So if I'm doing my math right, that means they're at 11th grade?
10th, sophomores.
10th grade. Yeah. Okay, so college is coming up.
College coming up.
Anybody leaning any one direction? Are we going to get a Big Ten school coming, or what's happening?
They would love to go anywhere out of state. They want out of Colorado.
They don't know how good they have it.
I don't know. I don't know. Maybe because we raised them to be somewhat worldly. We've lived out of the country. We've traveled some. We've raised them to like, you don't have to stay here. You don't even have to stay in the U.S. You can like think of the entire world as being open to you. My daughter was in Spain this summer. She's pretty much fluent in Spanish now. So I think they just want to get out there. They want to see things. They want to have experiences. And that's kind of how we raised them. So we'll see. We'll see. Like the obvious choices are like CU Boulder here, which is like 20 minutes up the street. CSU is kind of an obvious choice too, but they both want out of here. They just want to do something different.
Yeah, as most kids do. Everybody wants to get out of their hometown and go somewhere else.
Yeah. Now I've talked to my son, and I told him, I said, look, we're going to have enough money to send you to college. We'll have more than enough money. We'll have enough money to send you out of state. And I said, if I gave you a choice of going out of state or going in state, and when you graduate, I'll give you whatever's left over, which would you choose? And he doesn't know. He doesn't know.
That's an interesting question.
I think he would lean towards staying in state and taking the money. So it's like when they think of it as like an unlimited, I can just go wherever I want, then of course they want to go to out of state. But when they think of it as like, hey, if I stay in state and dad's going to give me a check for 75 grand when I graduate, suddenly it's like, oh, maybe I'll go to Boulder.
Hey, he could go to CSU up in Fort Collins. It's an hour and a half away from home. It's going to feel like he left home. That's good enough.
I agree, and it's a perfectly good school.
I love this. This is really interesting, and it's important context because I had a similar situation when I was going to college. I was devastated. UConn was the only school I got into, and I did not want to go there. It was like just an extension of high school, right? Like you're a loser. So I was so bummed out. Then my sophomore year, my dad bought me a car and was like, "This is awesome that you're going to UConn." By the way, I had no clue how much money I was saving on college, but I didn't know that beforehand.
Right.
Else I would have been so bummed. But
right.
You know, my college regret is, I mean, I have no regrets about where I went to school. The school I went to, University of Buffalo, it's a SUNY school. Fine, great school, great experience, no regrets. But there is some regret, I should say, in that I didn't know anything, right? When I applied for colleges, I just applied to the 3 biggest colleges that were near where I lived, and I got accepted into all of them. I was the opposite, Jason. I had no desire to leave the state because the way I saw it was all my friends were sticking around. So I'm like, why would I want to go anywhere? All my friends are here. But my regret was my father at the time lived in Tampa, Florida, and he told me, he's like, hey, you can get in-state tuition if you want to go to Florida State. You know, you'll go there and it'll be cheaper than University of Buffalo where I went. And I was like, nah, that sounds crazy. I don't want to go there. Had I known Straza, I would have been going to Florida State in the 90s when they were a football powerhouse. I would have been like, I would have been there when Deion Sanders was there. It would have been amazing.
Yeah.
But I didn't know any better. So I missed out on probably an amazing experience, but whatever.
Yeah. I didn't know any better either. I was from the Chicago area. I applied to one school. That was University of Illinois. I was going to major in engineering. They coincidentally just happened to be one of the top engineering schools in the country. The reality is I would have just applied to whatever the big in-state school was, wherever I lived, and I would have just gone there. Like, I didn't pick it. Going out of state was not an option for me.
Well, you know what, guys? No matter what school the 3 of us went to, we would not have learned to do what the 3 of us do now as a career, right? We would not have learned trading. We might have learned some high concepts in finance, right? We might have learned some stuff to get us an accounting degree or a CPA or, you know, the capital asset management theory or whatever. But trading, we wouldn't have learned that shit, the stuff that we do day to day now.
Yeah, you know, it's interesting to say like that. Like, as an engineering student, I spent a lot of nights just pounding away trying to figure out how to solve problems. Because it's not like follow these steps and here's the answer. Because if that was the case, you can program a computer to do that, which they probably do nowadays. But back then, it's like you have to like struggle, and try and figure out how to design the load capacity of the beam in this building here, and you had to figure that out. And like there was a lot of struggle involved. And then when I started pursuing trading, this idea that I'm going to like buckle down, roll up my sleeves and just pound away and try to figure something out was something that actually came fairly easy to me because I had done it before. The fact that the idea that I would like read a book, study it, pull some charts up and go chart by chart by chart, bar by bar, till 2 a.m. for months at a time, trying to figure this out was actually fairly normal activity because that's what I did all through engineering school anyways. So in a sense, engineering school didn't prepare me for the mechanics of trading, but it developed intangibles that led to successful trading.
Yep.
Yeah, you're hitting on something I say about college all the time. Unless you're going into something very specialized, like say brain surgery or something like that. I think the biggest value that most people get out of school, and I'll put high school in the same category, high school and college. The biggest thing that we get out of that, at least we should get out of that, is we learn how to learn. If you can learn how to learn, then you're set up for life, right? Yeah. Maybe you got an A in history. Great. I'm happy for you. Maybe you did well in English 201. Super. None of that shit matters. But if you learned how to learn, you're going to be set up for life. And that's really should be the goal for most people going to school. Unless, obviously there's special things they have to do. But yeah. So you hit on that, Jason. Well done.
I completely agree. If you have some special talent, then you probably should pursue that special, unique talent. But otherwise, like learning how to learn, learning how to grind, learning how to figure things out, like those intangibles will will set a foundation for success in anything you do better than getting an A on that history test.
Yep.
Well, Jason, this has been awesome. This has been a great talk. I think we kept you longer than we planned, so I apologize for that. But when we're having a good conversation, we just got to keep rolling with it, right?
It's been fun. And now that the 16-year-olds will start driving, I'll be able to go to the meetups much more often.
Well, I'm hoping the 16-year-old that's interested in learning about trading, maybe you bring that one along one of these days. I'd love that. That would be great.
One last question about 16-year-old. Do you want what you have, your career, for him? Like, do you want him to be a trader? Would you prefer he wouldn't be a trader, or are you indifferent? Want to figure it out?
I would be in favor of him being a trader. Yes. His twin sister is smart, very, very serious about academics, very intense, straight A student.
Yeah.
She wants to be a doctor, and I'm all for go to college, go to med school, become a doctor. It's a perfect path for her. My son is the type of person who is smart, but less motivated to do well in an academic setting, but he'll do well in life. He'll navigate life and figure things out. And like traders are kind of like those types of people who we have a background, we're smart, we could have pursued a career, but we somehow navigated towards trading. And I could see him being that type of person who isn't going to just go get a job in corporate America and follow that path. He's going to be more of an entrepreneur. And I'm all, even though the success rate is like, 5% or 2%, whatever it is, as a dad, I'm all for him pursuing trading.
Well, he's got one advantage that a lot of other kids don't have, and he's got you as a dad. So that's pretty good. That's a pretty good head start. All right, Jason, thanks for doing this, buddy. I'm so happy you came on, and I'm looking forward to hanging out with you again soon here in Colorado. And
thanks for having me.
And Straza, we got to get him on the morning show again soon, huh?
Yeah, it's been a while. And this has been fun. A real pleasure. Thanks, Jason.
Awesome. We'll see you guys.
Trading is not hard. It has got to be the title for this one.
Yeah, well, I mean, I like that. I was also going to say a good title might be Learning How to Grind. I mean, he kind of talked about it, right? I mean, when he was working at a restaurant and sometimes working double shifts. And I love that whole story about how he was like analyzing his own data and seeing like, okay, on the days that I worked, I actually did better than the days when I sat on my screen and traded all day. Like, I thought that was really insightful.
No, I love that. And I also think that a lot of traders come from this sort of a beginning in some sort of service or hospitality industry. Mm-hmm. Probably usually will be waiting tables or bartending. And I also think there's something to that. Like I bartended at a really young age and I learned about money and I just wanted more of it and fast money. Like you bartend, you make hundreds of dollars, sometimes thousands in a single night. You go home with that cash, it's yours. Mm-hmm. Traders love that.
Traders do love that. Yeah. Jason's one of the good guys, man. He's been coming to my meetups for a while, so I feel like I know him pretty well. And he's one of the guys that like, we always get newbies, like people coming who don't know anything about trading, and Jason's a really friendly guy, and he's really patient with people, and people start peppering him with questions because they could tell that he knows what he's talking about. And he really has a good insight and philosophies about trading. He's very zen, and I love it. He circles back to what you and I were saying at the top of the show before he came on about how in Chicago, it seemed like it was a lot easier for just the regular Joe off the street to get involved in trading. I'm glossing over it, of course. It wasn't just you couldn't just be anybody and walk in and become a trader. Yeah. But a guy like Jason, who was waiting tables, was able to find his way into the trading world in Chicago. Maybe in New York that would have been a different path. It would have been harder to do. I don't know.
I also think that he's really figured something out on like the personal side of trading. And that's why I asked him that last question, like, would you want this for your son? Because I know for a fact there are some phenomenal traders who we have interviewed on this show who would say, no, never. No, never.
No.
But he was, yeah, sure, right? Like he's figured something out. His life is good. Like you said, he's very zen about his trading. It's not a misery for him. Really?
No, it's he's in a good place with it, and he recognizes he's grateful for what he has, and he mentioned it early in the show. He's when he hits a rough patch, and he's like, "Oh, I still have a roof over my house. I got money in the bank. Got food in the fridge. Everything's good." And that was a very good question to ask, Steve, because I listen to other podcasts. I listen to other professionals in other areas of the world talk about their careers. So you hear actors all the time get that same question. Would you want your son to get into acting? And so often you'll hear an actor say, no, I don't want them to. This is so hard. And when I hear that, and I'm thinking this now, Straz, is like, when I hear that, it's like, well, then you're not being grateful for what you've got right now, because you are at the top of your profession, whether you're a Hollywood actor or you're a trader or you're an athlete, you're at the top of the world. And if you're thinking that you don't want your kids to go through it, well, then you're not appreciating what you have, and you're not practicing gratitude. And maybe that's holding you back in some other way.
I think it does come down to gratitude. I think you nailed it, Sean. The last thing that stood out to me about the interview with Jason, I take little notes as we go along here.
I love it.
You talked about, understanding the stuff you need and the process of simplifying. And I think all great traders, he discussed it like it was a bell curve, right?
Yeah.
You go simple, and then you build and you add tools to the toolbox, and it gets way too complicated. And then you learn and you hit, you have this moment of clarity. Wow, I'm doing way too much here. And then you simplify again, right? And you start removing all of these tools. But he talked about basically how it gives you the confidence to simplify. Like, it's important to actually know about the indicators or the stuff that you want to ignore. That gives you the confidence to then ignore it. I love that.
No, that's a big concept. I mean, that may be the biggest takeaway from this whole conversation, is that whole idea. I like the way you called it, a bell curve, right? Whether we want to do it or not, it's probably necessary, and it's painful and it's hard, but we got to overcomplicate shit, and we got to learn the nuts and bolts of the things, and then we can start stripping it away and getting to the essence. Yeah, I think that's so important. And you went through that learning curve. I went through that learning curve. Jason certainly went through that learning curve. I think most of us who've been around this game long enough have all done that. And we don't want to do it, but we have to do it.
Rite of passage. And another one too is I'm finding, I think some of the most hardcore traders have early experience with options. I think it's important to hurt yourself or fall on your face early on, and you want to get that out of the way. And if you're slinging options and trying to learn trading and you're doing those things together, the learning that is going on there, and you probably don't know it while it's happening, it feels like things are probably falling apart. But I think there's something there too.
Yeah.
I think everybody should learn options.
All right, Straza, on that note, let's wrap it up. Great show, buddy.
Yeah, this was fun.